Welcome back to Who Wants to Be an Accounting Millionaire, powered by Financial Sense, where the only thing more complex than the IRS is our contestants' knowledge of business structures. I'm your CPA host with the most, Drew Carrick, aka the Rapping CPA, but I'll wrap this intro up real quick. Today's theme, entity structure smarts. If you've ever been told by a client, it depends, this one's for you. Today's contestant also has an accounting pseudonym, similar to myself. They call themselves by, and that is the Fun CPA. But I'm not going to spoil the fun, so let's get into the intro from the man himself. How about a fun little introduction so everyone can get to know who you are?
Yeah, thanks, Drew. Really appreciate that. Yes, I'm Yuri Kapilovich. I got an accounting firm, and through my journey of posting on LinkedIn, I came up with the Fun CPA, and it stuck. And since then, I've done networking events, done very differently. As a matter of fact, I got one coming up tomorrow, which is going to be a wild time. We got boat rides, DJs, open bar, all the stuff that's associated with fun. Yeah. And in addition to that, obviously I have my own accounting firm. I also do a podcast. And I guess try to get to the client work whenever I'm not doing all these other things.
So what is the sort of purpose behind having created the Fun CPA? I know I accidentally kind of just started making raps, and then the next thing I know, it just became the Rapping CPA, and I was like, oh, I guess that's my thing now. How did this sort of get started?
Very similarly to you, I've been posting on LinkedIn for about 4 years now, almost daily. And then back when I first started, I used to just ride my bike, and I'll do bike thoughts. I was on a bus going to New York City, and I would write bus thoughts. And one time I just started typing the Fun CPA just randomly. It took completely random. And then as I kept doing it, it resonated with me. And then I went to this event. I share the story a lot, but yeah, I went to this event. It was for wealthy people, it was wealthy people toys. So they had helicopters, private jets, stuff like that. And I somehow talked my way into a booth there. And I made a sign. It said the Fun CPA, but the reason why I knew it was something I was onto something is because nobody could process that. The people walking by were like, the funk pa? What does this say? What is this? And then that basically transitioned. So I was like, if they can't process it, it's clearly something. And since then it's just become, my brand. And I think people resonate with it. It just really means, somebody you can just talk to. That's not your regular CPA, much like I'm sure you experience.
Is this a bifurcation of its own separate purpose, or is it just to drive kind of awareness to you and your firm?
It's a completely separate thing. It certainly, of course, it drives to my firm as well because people, resonate with it. They're like, oh, this is something different. I'm looking for a different accountant. So yes, but primarily the focus of this is actually to the profession itself, to make the profession more enjoyable, to cure this pipeline issue in some way and bring the allure back to the profession. And in fact, I most recently launched a community called Mentors Count, where we focus on mentorship, bringing that back to people who are at the staff senior level and can't get that mentorship that I once had. So that's kind of where it's evolving to between the networking events, podcast, and that. But yeah, it's geared towards the folks in the profession.
And how did you transition to actually having your own firm? Was that something from the very beginning, which you were like, I'm going to go out and create my own firm, or did you start in public or working in private somewhere? Or at a small firm?
Yeah, I was always in the public accounting space. Actually, I was at a semblance of a large firm of sorts for 12 years. I actually jumped 7 firms before going out on my own, trying to find a perfect place where I could be, make partner and do the usual stuff that everybody wants you to do. That doesn't exist for me. Never did, I guess. And I tried though. I gave it a valiant effort. Sure. But yeah, it never happened. And so I ended up just going out on my own. And that was kind of, there's a story to that too, where I was supposed to buy out a practice for $100,000. But then the deal fell through 5 days after I gave notice. And so I was kind of in this weird limbo where I'm like, do I go back or do I stay? And then I ended up just obviously staying and not coming back to the firm. Ended up contracting. So a lot of the stuff in my journey is very much accidental. Much like I'm sure many others are. But yeah, accidentally I stumbled upon contracting because the deal fell through, built my firm up in the time and space that I had when I was not contracting. And so, yeah, it's kind of worked out that way.
Very cool. Yeah, sometimes you just have to take that leap, or you just got to have that push and you figure it out as you're running.
Yeah, 100%.
So I imagine with all these different clients that are interested in interacting with the fund CPA, they, have a lot of different entities that they have to be building. So what makes you confident about taking on the entity structures for today's trivia?
Well, hopefully I don't shoot myself in the foot, but I had the 12 years at the big firms, from the EYs to like Eisner Amper to Cohn Resnick to all these big names before going on my own, seeing a bunch of these structures, a bunch of these different ways that people set up their entities. And now, man, the funny thing is I'm now on my own for about 4 years. I'm not going to lie to you, like a lot of that higher end big firm, structuring stuff has faded a bit, but let's see. But I guess that's what makes me confident, I suppose. 12 years plus.
Well, the wrapping CPA, the fund CPA, these are all things that have never been done before. Another thing that has never been done before is anybody winning the $1,000 from Who Wants to Be an Accounting Millionaire. So what would you do if you won the $1,000? What would be what's been on your mind of something you've been eyeing that you're like, I really want this, but I don't really want to kind of chalk up for it?
Ooh, that's a good question. Honestly, I really been wanting to take some bartending classes. I'm really a big fan of making drinks, man. Like I make drinks at parties in my house and stuff, and always like get creative with it and go online and look at stuff. But like professionally making them and doing actually, it was funny. A dream job of mine, if I wasn't an accountant, is honestly I'd probably be like a bartender or something, because I love talking to people and I love making drinks.
That's terrific. It's funny you say that, because I have a very similar sort of thing where I've had this dream that if I can come upon a large sum, I always wanted to open up like a speakeasy and be. I love mixology, right?
Yes.
So I just love studying the craft of making the different cocktails, and so that's a really cool thing to do just for fun, right? There's it's not a high pressure thing where it's like, oh, this is my living. It's just like, no, this is what I want to do, which is
an
for
sure
and fun thing. Very cool. So I think we have a good idea of who you are. Obviously, making craft cocktails is definitely a fun thing to do, and something to get into, hosting parties and everything. But if you're ready, let's kind of get into the gameplay and
let's go.
A little breakdown of the rules of the game and how it's going to work. So the way this is going to work is that you will have 10 questions. Questions will get progressively more difficult over the course of the episode. There will be safety nets along the way. So at question number 3, when you've accumulated $30, you will have that as a safety net. So no matter what happens after that point, you'll drop back down to the 30. And then at question 6, you'll be locked in at least taking home a minimum of $250. Now, each question along the way, you have the opportunity to use one of your lifelines, which there are 3. That includes a switch the question, which is if you don't like it, you can switch it. It might be an easier question. It might be a more difficult question. That's kind of a risk that you have to take. There's a 50-50 where we'll eliminate 2 of the wrong answers. And then there's a bookkeeper's hint where I give a subtle nudge the best I can. Now that is a completely improv thing. So my hint could be useful or it could be useless. Again, it's use it at your discretion as you need to. You can end up using all 3 on one if you end up needing to. The good thing is that if you do get a question wrong and you drop back down to whatever your safety net is, the questions then moving forward, you'll still have the opportunity to answer. They'll just each be worth $10 from that point on. So no matter what, you have the opportunity to keep on accumulating at least at that flat $10 value along the way. Everybody at home gets to play along with you, see if they're keeping up or see if you're beating them, and everybody wins, and then we get a fun little episode out of it.
All right. Sounds good.
Cool. So if that is all right, then let's see if you're ready to kind of get all and be the first person to win the $1,000 from Who Wants to Be an Accounting Millionaire.
I'm ready. Let's go.
Right. So we will now get into the episode with question number 1. Which of these business entities can choose to be taxed as either a sole proprietorship, a partnership, or a corporation? Is it A, an S corporation, B, an LLC, C, a C corporation, or D, a nonprofit?
Ooh, it's a good one, but I feel like that one's starting off a little light, so we'll go with B, final answer.
B, final answer, locking in LLC, and that is the correct answer.
Ooh.
The LLC.
Yeah.
It's the Swiss Army knife of entities.
Yes. Yes, it is. It's a good way to put it.
Yes. Everybody loves an LLC. Everybody's talking about we want to open up an LLC. So that locks you in. You got $10 now added to
right.
you're off to a hot start or whatever. I like the confidence going into it right off the bat, knowing what you're doing. We'll be moving along to question number 2.
Sweet. I'm $10 richer now.
Yes. Well, you got to get to the safety net first
Oh,
to lock that.
good point.
So. Which of the following is not a pass-through entity? A, an LLC, B, an S corporation, C, a sole proprietorship, or D, a C corporation?
Ooh, that one's another easy one. I appreciate that. But yes, all of those are flow-throughs with the exception of the C corporation because they flow through the income down. C corporation, the income gets stayed there, and that's where the tax is paid. So D, C corporation. I'm locking it in.
D, C corporation is correct.
One more. Come on. That's the $30.
So you've accumulated. That's another $10 that you got. You've now accumulated 20 in total. I love the walkthrough too, giving everybody a little education along the way. So when you did the CPA exam, which was your favorite part, or which did you feel like, oh, this was like my go-to that I felt was the easiest? Maybe I was most compelled to.
It was reg because I've been in tax I've always had a big passion for tax, even since like day one of college. And then, continuing that throughout my career has always been a big thing. So yeah, I'd say it was the easiest one.
I was in audit, and I did feel like BEC for me. Obviously, the BEC doesn't exist the way that it did before. That one was other than some of the managerial accounting stuff. It was the most fun. I felt like it was the most business centric overall to the areas beyond that. But the audit was the best performance that I had, and I think that's just a straight memorization sort of.
It is.
Thing. It's kind of like a history exam, but
for sure.
History, so that works. All right. So we're rolling along here. This is a big question here because we've got question 3, which will be your next safety net question. Which business entity typically allows the easiest transfer of ownership shares? Ooh. Is it A, a sole proprietorship, B, a general partnership, C, a corporation, or D, an LLC?
Ooh. Easiest transfer of ownership of shares. I would say, I think I know the answer here just because of that, but you know what? Let's go with a 50-50. I feel like I'm using it a little early, but
might as well get to that safety net.
Yes, exactly. I can get my $30.
So we will be removing B, general partnership, and A, sole proprietorship.
All right.
So your options are C, C corporation, or D, LLC.
Ooh. Yeah, I'm going to go with C. Final answer.
Final answer, C, C corporation. And that is correct. C corps are the Wall Street darling, right? Because
yes.
They make buying in or bailing out super simple.
Yeah, exactly.
All right. So you have passed your first 3 questions. You've got your $30 safety net locked in. If at any point moving forward you do get a question wrong, you'll drop back down to the 30, but each question from that point on will be worth $10. But based on the confidence and the way you're kind of rolling so far, it seems like this is a good trajectory that you're on.
I hope so.
All right. So question number 4. Now we'll get into some of the more medium, perhaps, difficulty questions. A partnership must file which IRS form annually to report its income, gains, and losses? Is it A, Form 1040, B, Form 1120, C, Form 1065, or D, Form 990?
I'm just going to go right for it. I'm going to be C, final answer. And that's because I prepare about 1 million of these. So,
C,
final answer, C.
Form 1065 is correct. Partnerships don't pay tax, but they don't let that fool you. The Form 1065 is a full-on novella.
Yes.
So how in the know are you with technology now, with as far as like obviously all of the different, whether it's AI and the agents and the different softwares and the platforms, and it seems like there's a new fintech company announcing a series fundraising round every other day.
Yeah, there's so many of them, and it gets to be pretty overwhelming when you're, especially for me, I do a ton of posting, and so the cold outreach can sometimes kill you. And there really are a ton. I have some stuff out there, nothing crazy with the AI. Certainly no, Jason Stats out there with all his stuff. I dabble in it. I got a couple little things, but really soon here, once I'm done with this event planning and all this other stuff, will be I've been talking to Financial Sense actually, and we'll be getting rid of my dinky Excel that I'm not even going to lie to you for the last 4 years I've been using to run my firm.
Wow.
And it's time to upgrade. But yeah, I'm as much ish talking that I do on the internet about people being old school. I myself can be pretty old school in terms of, like, I'm sure if somebody else will see me with more tech than me, will probably think I'm pretty old school. But sometimes old school works.
Yeah, I mean, sometimes it's just one of those transition periods where it's just, you have to kind of get to the point where you're like, okay, now I can allocate some time and focus energy on this. You said you have the event planning that you're doing. Now, is this event just for, if you put it on for your clients, or is it for a larger kind of community, or who's that for?
This is, so my clients, it's not for them. It's actually for accountants primarily. So we're going to have, as of right now, we got about 42 attendees, of which about 80% are accountants. And the rest are like small business owners, not necessarily clients of mine, but just people from the interwebs who just wanted to come along and hang out with some accountants, I guess, that are fun. But no, the idea is, networking events don't have to suck. And I'm just going to prove it because, I got, like I said, I got boat rides and all the stuff. It's going to be a ton of fun.
Now, where are you located? Where are you hosting this event?
I'm in New Jersey, and the event will be in New Jersey also, on the water in the Atlantic Highlands.
Oh, very.
The beach, it's a little beach bar. No, but I say beach bar, but it's on a marina. It has sand, fire pits, open bar area. Then you go down to the docks. Off the docks is where the marina is, where I rent boats from for my other events that I do. Just networking boat day. And so they're just gonna put a boat in the water for us for about 4 hours and give some rides. Yeah,
that sounds like a good time. I mean, I would. Perfect. It's a perfect season for it, and I think anybody would be crazy to not want to be at that.
I know. It's going to be a good time.
Cool. All right. So you have now accumulated $60 total. The last question, the questions are now worth more. So you're 2 questions away from your second safety net, which will make your accumulated value be worth $250. So
let's go.
2 questions to get there. So let's get to question number 5. How many shareholders can an S corporation legally have in the United States?
Ooh.
A, 25, B, 50, C, 100, or D, unlimited?
I'm gonna just try to talk a little bit about it. But I mean, the answer I know. But yeah, it's a weird rule, and they've got, not only is it as the answer 100, but it's also very specific to, who can be an owner of the S corporation. So you got a lot of fundamental laws around it. But the answer is C. Final answer.
C, 100 is correct. You knew it.
Yeah.
I knew it. Everybody who said, all right, this guy knows exactly what it's going to be. 100. Yeah. The S corporations. That was always one of those weird things that you just are like, it's just, that's the number that was picked. It could have been 25. It could have been 50. I don't know what happens at 100. That's like, oh, now it's too many people. But
yeah, I don't know.
Interesting.
Do we need to do one of these so people believe that I'm not like Googling stuff?
I think you're good. Show me your hands.
Yeah, show me your hands.
All right. So you passed question 5. Your earnings are up to $120. This is a big question now here to pass question 6 in order to get to your safety net, which would make you worth $250 on the episode, which would set the record for the highest so far of any that we have done so far on the show.
All right. Let's go.
All right. Question 6. Which of the following entity types cannot be owned by a non-U.S. citizen or resident? A, a C corporation, B, a sole proprietorship, C, an S corporation, or D, an LLC?
All right. The answer is C, final answer, but I will also expand on it. Because of those weird rules that are part of the 100 shareholders, one of those rules is that you cannot be a non-U.S. person.
S corps are kind of like exclusive clubs. You got to be a U.S. citizen.
Yes,
you got to be a U.S. citizen to get in.
Yes.
And it's so funny. Everybody always, I think a lot of professionals always advise once somebody forms LLC, you hit obviously a certain, revenue amount, and then you want to, switch over to an S corp in order to save on that self-employment.
The classic.
Yep. The classic go-to. So C, S corporation is correct. And with that, you are now at gross earnings of $250. And
Sweet.
We'll see now if these questions will get a little bit trickier or harder to see if they can get stumped before then. But this has been an impressive run, and obviously it makes sense after spending 12 years working in the public ecosystem and now running your own firm, I'm sure the whole textbook is basically ingrained in your head.
Pretty much. Unfortunately or unfortunately, I'm not sure, but at least the 250 will get me already my bartending class.
Yeah,
so I'm happy. The rest is
now you start going for the ingredients.
Yeah, that's right. Those things are expensive.
Those are the things that'll start to get expensive.
No berries. Can't afford berries yet.
All right. So as we head into this last batch of questions, you do have your 2 lifelines remaining, which are the bookkeeper's hint and the switch the question. So let's get into question 7. In which state is it possible to form a series LLC, allowing internal divisions with separate liabilities? A, New York, B, Delaware, C, Oregon, or D, Florida?
Ooh, which state is it possible to form a series LLC, allowing internal divisions with separate liabilities? So I'm going to use one of the lifelines. I think I know the answer only because that is the state that is very favorable to business structures and business formations. But let's go with the bookkeeper's hint.
I would say, as a natural improver, that your inkling. Sometimes it's always good to go with your first gut and to follow the stuff that you're familiar with.
Well, then I would say B, Delaware. Final answer.
B, Delaware, is correct.
Yes.
It's like the Russian nesting doll, except every doll can sue or get sued on its own.
Yes.
So you still have your switch the question available. You have now accumulated earnings of $400. You are locked in at your $250 minimum safety net.
Yes.
Of course, at any point along the way, if you feel like you just want to walk away from it, you will have the opportunity to walk away with what you have. So that is something to keep in mind as you approach the last 3 questions now.
All right.
Question number 8. Which IRS form does a single member LLC file when taxed as a disregarded entity? A, Form 1120, B, Form 1065, C, Form 990, or D, Schedule C?
This one surprised me a bit as a hard one. It's a D, Schedule C. When you're a disregarded entity, you do not have to file a separate form. You file it along with the 1040 with Schedule C.
Get this guy in a classroom because he's just putting on an absolute clinic and lesson for everybody. It is D, Schedule C. Correct answer.
That is what we do, by the way, in Mentors Count, my community, where we got plugging away here, by the way, where we got tax technical stuff, soft skills, community type stuff. So there's a ton of stuff in there. I actually do the basics. I teach the basics of 1040 prep, literally from what's a W-2, what's itemized deductions, what's standard deduction, down to, what's a book tax difference on the M2 on a 1065. So really just focusing in on the people out there that, need the mentorship and need the tax technical, but can't or feel bad asking the question from a manager and being out of fear of looking or sounding stupid, which is silly.
So what's the primary audience of the individuals? Are they typically on the younger scale and they're seeking up, or?
Yeah, the ideal person that will probably benefit the most. I mean, anybody will benefit because tax technical. We're getting a ton of questions in there, entity structures, stuff like that. But to me, the one I really want to get to is that person that's like a staff or a senior that really needs the mentorship and really needs somebody to help them along the journey. But because of the pipeline issue, because people are leaving in droves, it's creating a pressure on the current managers to not have time to provide the mentorship. So you join this community, and that's where you're going to get that mentorship. So that's the ideal candidates.
I think that's a really valuable thing because especially when it comes to in college and you're studying all this stuff, you're kind of just cramming. You're not even retaining. You're not remembering anything. You're seeing everything on paper and in theory, but you're not really understanding the practice of it all and having the ability as you're working through it to get more familiar with it. I know, personally, I would probably benefit from it coming from audit. I don't remember really much at all from tax, and that seems to be where most of my colleagues who have their own practices, everybody's always looking for help and whatnot, and I feel bad. I'm like, I really
Yeah.
just I just am not familiar with it, because when you come up the audit and advisory side, it's just a different trajectory.
100%. And it's for everybody, So yeah, definitely.
So you're 2 questions away from being the first $1,000 winner of Who Wants to Be an Accounting Millionaire. Obviously, with financial statements, there's always 3 zeros added at the end, so that's why we're going in thousands here. All right, so
Let's go.
Our last 2 questions. Question number 9. Which of the following statements about professional corporations, or PCs, is false? A, they are typically formed by licensed professionals like doctors and accountants. B, they offer the same liability protection as a standard C corporation. C, shareholders must generally be licensed in the same profession. Or D, they can elect to be taxed as a sole proprietorship.
Now it's getting more difficult. So professional corporations are typically for professionals like doctors, accountants. There's plenty of those. They are treated as a C corporation for tax purposes. The shareholders generally do need to be licensed in their professions. So the one that's false statement is D. Final answer.
D is correct. PCs play by strict rules, but your law partner can't just invite their dentist buddy to co-own the firm with them. That would be quite the crossover of a professional corporation. You get just a bunch of professionals, and they all work together. You can get your teeth done, your legal services handled, and your
and all the above, and maybe and maybe just go ahead and get your visa too while you're at it.
Yes. Okay, so you now have earnings of $800. You'll be going into question 10, the last question for $1,000. You still have the switch the question lifeline available. You also have the opportunity to just walk away with $800 and call it there. If you do, for some reason, get question 10 wrong, you would drop back down to your $250 threshold that you had from before. Question 10. Which of the following entity structures is not eligible for Section 199A's Qualified Business Income, or QBI, deduction under typical conditions?
All right,
A,
$1,000.
sole proprietorship. B, an S corporation. C, a C corporation. Or D, an LLC.
So the 199A, or the Qualified Business Income deduction, is only available to flow-through entities or sole proprietorships. It is not available to C corporations. So the one that is not eligible is the answer C. Final answer, C corporation.
This reminds me of when, I forget the guy who won the actual Who Wants to Be a Millionaire, and he uses this lifeline at the very end to call up his dad and say, "Hey, Dad, I'm about to win $1 million." It didn't even use it. C corporation is correct. You are our very first winner.
Yeah.
Who Wants to Be an Accounting Millionaire, powered by Financial Sense, to win $1,000. You are our first accounting millionaire.
All right. That's awesome.
That's the eventual trajectory of your firm. Is that
I hope so. I sure hope so. This was awesome. Thank you. This is
I think you put on an absolute clinic for everybody. I think this is a great piece that you could even use to show your mentees. This is a little bit of education lesson as you're going right along here.
Well, I appreciate that. I'm gonna shout out Tosin for hooking me up, and also she was like, "Oh, which section would you want to do it on? Would you want to do it on entity structure?" I was scared about the entity structures, but I'm glad I chose it.
Yeah.
So this was really awesome.
Sense. That's it for Entity Structure Smarts on this episode of Who Wants to Be an Accounting Millionaire, brought to you by Financial Sense. The only thing better than knowing the right entity is knowing how to keep track of them all and how to keep them all on track. It's been a pleasure hosting you today, Yuri. Thanks, everyone, for watching. I'm Drew Carrick, and I will see you next time on Who Wants to Be an Accounting Millionaire.
Thank you so much for having me. Later, everyone.